Hi folks, Lee Gettess here with the market sense for the week of June 24th, 2014. The charts I look at come from the Trade Navigator software, and I am not an endorser of this software, but I gotta tell you, it just makes my life so much easier. We're looking at the weekly bond market here, and bonds, as you see, after breaking down off the highs, have been basically nothing but sideways, and they're showing a little signs of life here, but they haven't done anything really important yet. We've got resistance up here in the 136.20 area at the upper moving average, and getting there wouldn't really mean that much. It would be more exciting if they blow through it. If they blow through it, we have both the upper Keltner channel and the previous swing high up above 138 there. It's 138.08, 10, 12 in that area. And they could go up there easily. I mean, really, there's no reason they can't do that. If they turn down instead, certainly with the lows of the last few weeks, there was no reason why we couldn't see them in the 134.16 area. Down here at the lower moving average. And I quite honestly don't understand exactly what's driving them at this point. We'll talk about that a little more in stocks. So they don't really have to do anything. So I think the 134.16, 136.20 area, both of those are interesting to see if they hold or break. And if they do anything, my guess is that upside is more likely. The one real caution here is our momentum indicator is basically negative since the highs, and they could find resistance here and at the same time have the momentum indicator kiss off its moving average. Now, you can't predict that, so I'm not predicting that. I'm just saying if they get up there and turn down, it'll look like what a lot of people call a kiss away, and that could be a real negative sign. But at this point, I think they could just blow right back up and, send the indicator to new highs as well as the market. Now, in stocks, a pretty interesting situation. New highs last week, new all-time highs, that is, which is, pretty doggone significant. And now this week, they were as high as 1960 Tuesday morning and then turned down and got below 1940 by the afternoon. Now, I hear the media talking about this being based on Iraq, and I just want to tell you that's a load of crap. Nothing changed in Iraq from Tuesday morning to Tuesday afternoon. Nothing's changed in Iraq in the last 48 hours. So whatever's driving it, Iraq isn't it. What I really thought is that they might go up here to 1967, which is this projected high here, and really I thought they could blow through that. I mean, I think we could have a serious rally for the summer. Now, this turn down is either making me look really foolish or it's a great opportunity. And right now, this green moving average is, let's call it 1935. Really interested in looking to buy in that vicinity. That's where it should hold if they are going to turn and blow up. You can see we really haven't been below it for a couple months here. That's mid-April when we were down below it. And just like this one touched it and took off, they could do that again and even accelerate higher. If I'm wrong, there's still a potential for support in the 1915 area. And of course, the previous swing highs are down below 1900 here. And it makes sense for a market sometimes to go back and test where it's been. Previous resistance becomes support and kaboom up off of there. All of those things are possible. But if it's really a rip snorting bull, and I still think it might be, they're going to hold this 1935 area here at the green middle moving average and take off from there. So I'm going to be looking real closely to see if there's a reason to buy if they get down there. So that's what we've got for you today. Hope you can find something profitable to get yourself involved with. Thanks for checking in to see what we think.